Does any of this matter?
I don't think so. The market has continued to look through the headlines and the politics and into fundamentals, and you see that in equity prices. You see that in what markets have been doing around the world. So no, I don't really think it's going to have any impact.
Is it okay that these guys don't really do anything down in D.C. anymore, because they haven't for a long, long time? So why does it make a difference if it's the Republicans doing essentially what the Democrats did for the last few years?
Well, listen, I think the markets are focused on the health of the economy, and employment is good. Wages have been a bit stuck, but when you look at the backdrop of global growth and earnings, and it's been a solid earnings season, inflation has been a little bit of a sticking point, but overall, the economy's in good shape, and stock prices are rising, and the headlines really just haven't mattered.
But to your point, John, Mohammed Al-Arian, who'll be joining us in just about an hour's time, wrote on Bloomberg View, as a Bloomberg View columnist, at the market's overall sense of Goldilocks, not too hot, not too cold, explains much of the gap between buoyant stock indexes and lagging economic and policy fundamentals. Goldilocks scenario in that respect has sometimes nothing to do with central banks. If we do get some kind of boost of DC, even a tax cut, do we wind up playing catch up? Even more so.
Yeah, I mean, it's definitely been one of those scenarios. The old maritime saying, red sky at night, sailor delight. It's definitely been.
I've never heard that, John.
No?
I have.
Yeah.
Oh,
well, the other side is red sky morning, sailor take warning, and we haven't seen the warning signs yet. I mean, the bottom line is we don't see a recession until at least 2019. And the overall backdrop of the economy is strong. And if you look at stock prices, particularly relative to bonds on an earnings yield basis, stocks are still cheap. So we're really not concerned about the political environment.
Big story in the last 24 hours on the Bloomberg terminal, at least, one of the most read stories about the rotation that may well begin in the United States, out of bonds into equities. Everyone's sick of talking about it because we've done that for years and years and years, and it just does not happen. What's the evidence it happens this time around?
I don't really think it happens. I think right now we've got a lot of room to run in a later cycle economy. Now, I'm not going to argue that the economy is in the early stages here in the U.S. and that's why we like the rest of the world more than the U.S. right now. But a lot of money can be made in stocks in the later stages of an economy, and that's what we're seeing happen in the U.S. right now.